You are listening to Uranium Spotlight on Tuesday, October 29th, 2024. Brought to you by PurePoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, PurePoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, long-term prices hold steady. Niger causes issues for Orano and solutions for Turkey, while Japan's weekend election puts its nuclear future in question. Last week, uranium spot prices softened, falling from $83 to $81 per pound U3O8 as trading activity slowed in anticipation of the NEI IUFS conference in Kansas City. Starting the week flat at $83, spot prices declined midweek when reduced demand led sellers to drop offers below recent transaction levels, pushing prices down to $82.25 on Thursday and $81 on Friday. Forward prices remained steady, with 3-year and 5-year rates holding firm at $94 and $101 per pound, indicating stable long-term expectations despite the spot market's recent dips. The October monthly average price closed up at $82.50, reflecting overall demand firmness. In the term market, while no new demand was formally reported, interest picked up slightly. A recent U.S. utility contract and ongoing offers from other utilities for future supplies underscored a strategic focus on securing long-term delivery amid tight supply projections. Non-U.S. utilities also continue evaluating contracts, including for small modular reactors, positioning the term market to ensure reliability against future constraints. The October long-term price remained unchanged, closing at $81, underscoring consistent support for the uranium market's stable pricing outlook amid cautious term market demand. Orano's uranium mining operations in Niger are facing a cascade of challenges. In June, Niger's new military government revoked the permit for the Amamaran mine, a substantial setback. Even prior to this, Orano was already struggling to access essential chemicals required for uranium production in the country. The situation has further intensified as uranium exports from Niger have nearly come to a standstill, impacting the global supply chain significantly. At the Somaire mine near Arlit, Orano's subsidiary is grappling with halted production due to financial strains. Since the military coup, Somaire has been operating at only about 60% of its typical production capacity. Even with the reduced output, none of the uranium produced over the past year has left Niger. Adding to this strain, Sopamin, the Nigerian state-owned company which holds 36.6% of Somaire, hasn't paid its outstanding debts to Orano or Somaire for over a year. Orano has been actively attempting to bring the mine back to full capacity and resume exports. Yet their communications with the Nigerian government have gone unanswered, stalling any efforts at resolution. Meanwhile, the Nigerian government is reportedly exploring potential partnerships for the Amamaran project with companies like Rosatom and the China National Nuclear Corporation. Such an alliance would deepen the bifurcation of the nuclear fuel market, creating distinct Eastern and Western alliances. This shift could lead to different uranium price structures depending on whether a supplier is aligned with the East or the West. In response to these challenges, Orano is reinforcing its global operations. It maintains active projects in Canada and Kazakhstan and is eyeing new developments in Mongolia and Uzbekistan. These expansions allow Orano to meet its commitments to customers worldwide, even as its Niger operations remain uncertain. This disruption in Niger comes as another blow to the global uranium supply, which is already constrained. With one less active uranium mine and no clear pathway for Niger's uranium to re-enter the market, pressure on uranium availability and possibly prices continues to mount. In Niger this week, we're seeing yet another significant development. Nigerian authorities have signed a new cooperation pact with Turkey, aimed specifically at bolstering their mining sector. This move comes on the heels of Niger's recent alignment with Russia and China, signaling a shift away from traditional Western allies. Niger's new military government has even been exploring whether Russia or China might step in to take over some of its uranium assets, solidifying its pivot towards the east. Turkey, despite being a NATO member, has navigated a unique geopolitical path, aligning itself closely with Russia, especially in recent years. Turkey has maintained a neutral stance in the Russia-Ukraine conflict, balancing its NATO obligations with a diplomatic relationship with Moscow. Russia is actively involved in Turkey's energy future, building the country's only nuclear reactor currently under construction and vying for contracts to build several more. Turkey has also contracted Russia's government-owned Rosatom, which monopolizes nuclear fuel services and reactor construction, to supply most of its nuclear fuel. Although Turkey remains a NATO country, its nuclear energy strategy is clearly tied to the Eastern Bloc. So, when we look at the growing bifurcation in the uranium market between East and West, Turkey's alignment appears increasingly tilted eastward, especially in the energy sector. This divide is only widening, particularly for Western governments and companies that now find themselves increasingly isolated from key uranium suppliers like Niger. The military coup in Niger has disrupted long-standing relationships with Western nations, leaving them out in the cold when it comes to Niger's uranium supply. Compounding the issue, many Western countries have effectively sanctioned Russian uranium, while the majority of Kazatomprom's output is already committed to Russia and China. Kazatomprom, as the world's largest uranium producer, accounts for nearly 40% of the global supply of U-308. Its own market analysis points to a growing demand for uranium in the next decade, predicting the world will need a new supplier of Kazatomprom's scale to meet future demand. This raises crucial questions for Western nations. Who will fill that role? And perhaps more critically, what steps can Western governments, corporations, and investors take to bring about the needed supply expansion? Without addressing this gap, the West risks stalling its nuclear power ambitions, jeopardizing its energy security, and potentially derailing its path to a low-carbon future. This supply challenge is about more than just energy. It's about securing the future of the West's nuclear energy agenda, ensuring its independence, and advancing its commitment to clean energy transition. Japan's political landscape has been thrown into flux by a recent election, complicating the future of its nuclear industry. The election results left no single party with a clear majority, making it tough to form a stable government. As parties begin coalition talks, Japan's commitment to nuclear energy hangs in the balance, a point of keen interest for uranium investors. In recent years, Japan has been steadily restarting reactors, and those restarts have proved tangible support of uranium demand. However, the parties now vying for power hold differing stances on nuclear energy, which could significantly impact the country's energy policy moving forward. The Liberal Democratic Party, or LDP, and its previous coalition partners have been pro-nuclear, championing reactor restarts to ensure a stable energy mix. On the other side, the opposition, led by the Constitutional Democratic Party, or CDP, aims to achieve net zero emissions without nuclear power, although they may face the practical realities of achieving this without increasing fossil fuel use if they come to power. The smaller parties hold the keys to this coalition puzzle, and their stances on nuclear vary widely. The Democratic Party for the People, or DPP, is strongly in favor of nuclear energy, while the Japanese Communist Party, or JCP, is firmly opposed. Then there are parties like the Innovation Party, which has no official stance on nuclear and tends to focus on local issues rather than a cohesive national energy policy. One precedent to watch is the LDP's history of concessions in coalition building. In the past, they've agreed to allow leaders from smaller parties to become prime minister as long as they remain influential in the ruling coalition. The LDP is only 18 seats short of a majority and could potentially reach a support and supply agreement with the DPP, which holds 28 seats. Although the DPP is hesitant to formally join an LDP coalition, both parties align on the right-wing spectrum and have shown willingness to collaborate on policy. The clock is ticking. Japan's constitution requires a new government to elect a prime minister within 30 days. For uranium market watchers, the question is whether the LDP can secure enough support to continue advancing Japan's nuclear restarts at their current pace, or if a centralist coalition led by the CDP will slow or even reverse this momentum. A delay or halt in nuclear progress could mean more reliance on fossil fuels, impacting Japan's climate goals and its energy security. As these negotiations unfold, uranium investors will be keenly observing the outcome. A stable pro-nuclear government would signal a continuation of reactor restarts, bolstering demand for uranium. Conversely, if the CDP takes the reins and steers Japan away from nuclear, it could dampen the country's long-term uranium needs, sending ripples through the uranium market. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.